Hello, hello, Mavericks. Here we are. It is July. Can you believe that? I can't believe it. Half of the year is gone. So let's put that half of the year in the books. And look, it was a fantastic first 6 months. It was maybe the best first 6 months that I can even remember over the last 4 or 5 years. Ankit, what about you? Can you remember any other period of time that was that good?
I mean, not really. I mean, I have to go back to like really 2012, 2013, where, there was a whole lot of activity. But I would say that in the recent uh, 5 to 6 years, there hasn't been as this kind of a price action that we've gotten, especially in the currency markets where, there's all these central banks are at work at the same time, and they're massive. There's massive stories that have taken place in the first half of the year. It's not just a dollar story. It's not just a yen story. Now we got the Swiss franc story. I mean, so I think it is really far out for me, going back to those 2010, 2011, 2012 times when I really saw this kind of price action. But yeah, this first 6 months has definitely been the most active that we have activity we've gotten in both the equity markets and currency.
Yeah, it's been really, really fun to trade lately. All right, so let's cover last week. Last week we had a pullback. If you remember, 2 weeks ago we had about a 6.5% daily or weekly rally, and then we gave back about 2.5, 3% of that this week. It was an ugly week because I felt like we had all the building blocks to extend that rally, and the selling was just overwhelming. Last week was just a reminder that we are still in a bear market. We are still in the middle of a massive bear market. So let's talk about bond yields, because that's the big story this week. This week, we've had all these inflationary pressures building and building and building, forcing interest rates higher and higher. And then over the last couple of weeks, things have been popping. And if you take a look at like the price of copper and the price of iron ore, they're down 30%. Even things like wheat, soybean, they're down quite big. Gold and silver have come down quite a bit. And we also got an ISM number out of the US of 53, but new orders were below 50. That's recessionary. So I kind of feel like there's a tug of war going on with this market of we're getting slapped in the face with these hot inflation numbers, yet under the surface, we're seeing deflation. We even saw oil back all the way back down to 105. It closed about 108 at the end of the week. And so I feel like the market is really wrestling with these two ideas of we're getting these high inflation numbers and no one can deny there's inflation. But looking out, there's a lot of things happening. And you say, oh my gosh, maybe interest rates have peaked. Bond yields, the 10-year bond yield was at 3.5 at the start of the week, or I guess 2 weeks ago. It is now down to 2.8. That is just a colossal move lower, signaling that the bond market now does not think inflation is going to be all that hot. So,
Hey Rob, I just want to quickly add about the bond yields there, and I do agree. And then one thing I do want to point out that it's just not the U.S. story. If you take a look at bond yields across the like major central banks, like look at New Zealand, Australia, Canada, I mean they're all coming off. So this is just telling you that we kind of seen that rush. I mean, since March, if we take a look at bond yields since March, everything has been shooting up. And now everything is kind of coming down at the same time. And one thing is pretty clear to me that there is a big lagging factor. I mean, if you go back to last year, we had all this inflationary pressures and we get the CPI numbers and be like, where's inflation? There was a big lag there. And I think now it's just the opposite happening where we are seeing commodity prices coming down. We're seeing, the oil prices are now no longer in this 120 to 130 range. They're actually coming down. And I'm not sure about the U.S., but in Canada, we just got a federal, gas tax holiday. So they're gonna bring the prices down quite significantly starting today. The price is going to be down 20, 30 cents. So there's things that are happening that are very deflationary. But we're not really seeing that in the numbers. So I think there's a big lagging factor. So I think that probably will continue, but the bond market is really what has been leading all these moves. So I think it's very important to pay attention to the bond markets and kind of decide what the direction is overall. But I think this is a good point to make that the things are way off the highs that we've seen in the recent.
And you are exactly right. The bond market is going to be leading this market. And I do think that lower interest rates are actually going to be quite good for the stock market and equities. We'll see. Let's talk cryptos. They're terrible. We've called them bottomless pits for the last 2 months. They are still bottomless. And let's check in on cryptos and how they did last week. Because last week was another week where they were just relentlessly sold off. So let's start there. The crypto basket down 9.3%. But if we take a look at cryptos individually, you can see it's just ugly. Another 10% move. These things are losing like 10% every week, some weeks 20%. It is just really bad. Now, I'm going to stick my neck out here a little bit and say that I think that cryptos are very close to bottoming. But look, I did not say bouncing. I did not say bouncing. I said bottoming. It's a big difference. I'll get more into that when we get into the crypto basket chart because I really want to focus on that. But if we take a look at the S&P, we had that big massive rally last week, brought us all the way up into that 3,900 range. We hit our head against that and we backed down. Now Tuesday's candle, this big red one, was a really nasty candle. It was ugly. And the next day, Wednesday, not so great. A gap down on Thursday, and you can see that Thursday candle we just held. And Friday was shaky, but at the end, we closed very nicely to the upside. Look, this isn't anything to say this is the start of a rally. We think the market has likely found a bottom, but it doesn't mean it's going to bounce. There are V-shaped bounces, there are W-shaped bounces, and there are U-shaped bounces. So we can already conclude this is not a V bottom. This is either going to be a W bottom or a U bottom. And look, it doesn't even have to be bottom. We could be wrong, and it could break below the low of 3650. But I think we're going to hold in these areas for a while. So I think it's going to be more of a U-shaped bottom, where we take a while to sit down at the lows before we finally start to move our way up. Anka, what's your call on equities?
Hey, Rob, I definitely think I'm on the same camp here. I mean, looking back just last week, I think I was much more convinced with that price action. Brought us back to those moving averages, the way we had last Friday. I mean, it was a very aggressive close. And this week's price action has really taken a lot of, traders kind of taken off the back there and seeing like that things didn't really turn out the way you had anticipated. But again, this is where, a lot of traders get shaken out by this kind of volatility in the market. So at this point, I mean, we have a better start of this month as today's the first day. The market looks better. We actually recovered quite aggressively from the overnight lows. So, I mean, I'm seeing markets, the money is coming into the markets. And maybe this has to do with the end of the quarter, the end of the half year mark. I mean, there has to be some rebalancing done. We don't know if that's really contributing to this down move this week. But I think this next week is very crucial as it really sets the stage higher for either a breakout. And if you can get above the highs that we got last week, I mean, I think that's going to be a clear signal. So at this point, it's more like consolidating into the sideways range here. I think what I'm looking for is a breakout and getting above the moving averages to mark that. And maybe we need a catalyst for this. And in the next couple of weeks, we have the FOMC coming as well. So I think we probably go sideways to a little bit higher in the next week or so. So that's really my outlook. I'm not superly bearish, but I'm not really superly bullish either. So I'm kind of right in the middle there and looking for the direction.
Yeah, thank you. And when we jump over to currencies, this is awesome. And this is what I was talking about. Typically, when you take a look at this chart, we have one currency that was up, 0.5%, 1% during the week, and maybe two that were down 0.5% or 1% for the week. And the rest are kind of in the middle. Take a look at this week. Everything was in play. Everything was tradable. There were so many moves happening this week. It was just a great week. I know I was long Swiss franc for a lot of this week. It was a great trade. I was short pound at the end of this week. It was a great trade. So this is just a wonderful, wonderful looking chart. We're getting lots of negative correlation. We're getting things that are moving down in a big way and things that are moving up in a big way. So let's get deep into these charts. We already took a look at the SPX. Let's take a look at the world index. You can see same thing. We have 2 green candles here. So it's bottoming. It's trying to bottom. We're trying to put in a bottom here. We'll have to see what happens next week. Same thing. We can't get bullish until we're above moving averages and the moving average slope has changed. So until that happens, we have to be more on the bear side. And here we have cryptos. They're just basing. Like I said earlier, I think cryptos have likely bottomed somewhere around here, but I don't think there's any upside. I still think the most you can hope for is a bounce maybe up to this 11,000. This is our crypto proprietary basket that we put together. So I don't think there's a ton of upside here. I think you're much better off playing in the foreign currencies. Next week, we do have some good news. We've got RBA. Now, the RBA is going to be on Monday night. The calendar says 12:30 a.m. That is technically Monday night. So because of the 4th of July holiday, we are not going to be meeting live for this one. We typically meet live before the RBA announcement to put on a live trade, but because of the holiday, we're just going to be on our own here on that one. We've got FOMC minutes on Wednesday, and then on Friday, we've got big news with the Canadian and the U.S. employment report. We will be meeting live on Friday morning for both of these, so come join us live. We'll be looking to put on a live trade on that one. Well, next week, equity markets, they're shaky. I agree with Ankit. I think we are neutral to slightly higher over the next week or two. I don't think it's going to be a big move, but I think it's going to be volatile. When I say neutral to slightly higher, I mean up 3%, down 3%, up 2%, down 2%, up 3. And then by the end of the week, you're up a couple percent, and it was an exhausting week. I think that's what we're likely to see. RBA on Monday night, and then Friday, Canada and U.S. employment report. So let's jump in and take a look at all the currencies individually, and let's rank them and score them and get ready for the trading next week. So cryptos, I'm just going to give you a spoiler alert. They're all in a big downtrend, but they're all at zeros on velocity, meaning they've had a big move down and now they're showing some bottoming action. So this is why I said I think we've likely bottomed. When you take a look at Bitcoin, you can see that the trend is still lower, but we're starting to see some movement in the velocity score chart, the 4-hour chart, that's saying, hey, it's probably time for a little bit of a break. It needs to just take a break before it makes its next move. Bitcoin Cash, same thing. It's a -3 on trend, low base. It looks terrible. The trend looks terrible here on Bitcoin Cash. However, we're getting some signs that we are bottoming out on the velocity score. So you can see they're all -3s and zeros. This is Ethereum, same thing. Litecoin doing a little bit better. It's a -2. Wow, that's amazing, right? Still means you should sell it. So until it gets above moving averages, until those moving averages cross, there's just no reason to be long any of these cryptos. And there's really no reason to be short here either. So I think this is just a no trade. Jumping into Forex. Let's take a look at the dollar first. Last week I said that I wanted to be short the dollar, but everything was telling me to be long the dollar. And if you remember, I say one of the things I'm the most proud of as a trader is that I no longer trade my opinion. And I said, I'll go long dollar. And I did take a long dollar trade this week, and it was an okay trade. It wasn't a great trade. It was an okay one. Made me about 30, 35 pips. The dollar is still looking strong here. When you take a look at a chart, if you throw out all of your personal opinions, this is a buy. This is a +2. It's a +1 on velocity, so we don't have a ton of velocity here. But I think going into next week, you can still look to be long dollar. Let's talk about yen. Now, we loved yen short this week. We talked about yen short. I took a yen short. I took a Swiss franc yen pair early in the week. Made some nice money. Yen was very weak on Sunday, Monday, and Tuesday. Wednesday, it bottomed out. And when the equity markets got a little bit more volatile, the yen got a little bit of a spike. So over the last 2 days, the yen, as you can see, has had a nice move higher. I am waiting for this yen to go a little bit more, and then I want to short it again. I think short yen is a trade I'm going to keep ringing the register on until it no longer works. Anka, what'd you call on yen?
Hey, Rob. Well, I think yen, yeah, I'm definitely on the same boat as you are. I think what we have seen, and I think something we need to pay attention to, exactly what happened back in April to May. I mean, there will be periods where things that the yen will likely consolidate to maybe go a little bit higher. And I think the price action right now looks very similar to what we saw back in April and May. So not really expecting a movement that we got like from late May to like early June. We are not really in that environment. So I think this is where you get to, refine your expectations. I think what we can get is maybe a couple of up days or a couple of down days, which is very similar, very common price action that we get in a sideways price action. So I think we can go with the Japanese yen a bit more sideways. I'm still wary of if there's going to be any sort of intervention from Bank of Japan. I'm closely watching the dollar yen cross. At least if it gets to a certain level, I think there will be a bigger risk. But I think right now, at this point, I'm looking for more consolidation or more sideways price action before I can find a conviction. And if it does want to break lower again, I think what we saw back in May, we need to see a bit of a rally, and then we just give up those support levels. Right now, not really seeing that. So you got to be really careful picking those directions.
Agree. And frankly, I'm going into this next week, and yen is not on my list of currencies I'm looking to trade. I'm willing to look at it later in the week, but first of the week, I'm not looking to actively trade yen. Swiss franc was the big winner last week, had a nice run in the first part of the week. So look, we had a big run, and now we are out of some gas. The Swiss franc has come a long way. It's come from 121 all the way up to 127. That is a big move. It needs to take a break. So that's all that's happening right now. Swiss franc is taking a break. So for me, I'm waiting for the Swiss franc to come in. If it can even come down to this 125, maybe even 124.50 area, that's an area I'm very interested in looking to establish a new long in Swiss franc. But until then, it's on the shelf. Euro's been
Hey,
on the
Rob, I just
shelf.
want to quickly add about the Swiss franc, and I know on a Monday, even though it's a holiday, we actually have the CPI numbers that's coming out from Switzerland as well. And I think as we have kind of ignored all these numbers before because there's not really a whole lot of movement that we get from central banks or the economic numbers. I think that's really back in play. And again, if the inflation number comes hot, that puts more pressure on the S&P because they're trying to tackle the inflation. So I think that inflation figures on Monday will be a bit more impacting the Swiss franc. So I'll be looking into this, especially coming on Tuesday, and see which way it wants to go. But I think that number could influence the exchange rate. So I just want to kind of mention that because we haven't really paid attention to any numbers coming out of Switzerland. But I think now it's a time to look forward. So maybe, we talk about catalysts, that could be a little catalyst that we can find on a Monday that could either help the Swiss franc to even stay stronger or pull back if the inflation numbers are not as hot as everyone else's is because, the Swiss bank doesn't give you forward guidance. But if the inflation is not an issue, then the expectation will kind of come off. So that's just my outlook on Swiss franc.
Thank you for that note. Euro is on the shelf. There's nothing going on with Euro right now, so just take it off your list and move on. Pound is weak. We've got a -2, -2. So we've got a trend, and you can see we found a little bit of support down here on pound on Friday. We bounced off of it, but I think that's just a short-term shorting opportunity. So if you take a look at the velocity score, everything's still working its way lower. We are having a little bounce. I am looking to short this bounce early next week. Canadian dollar looks great. It's been strong. It held up. And take a look. It had its run Monday, Tuesday, Wednesday. Took a little pause on Thursday, and we saw the Swiss franc come down a little bit. We saw the dollar that was strong all week come down a little bit. Canadian dollar said, I'm still strong. I still want to go higher. This is my number one currency on the long side, Canadian dollar long. Moving on to Aussie. Aussie had a terrible week and a terrible Friday. You can see here, we based for 6 or 7 days and then fell. So Aussie is now a shortable currency. It was pretty much in the zero category for a long time. Now we can actively look to be short Aussie. Now again, RBA is going to be on Monday night. Everyone be aware of that. I am not looking to make any Aussie trades until after the RBA announcement. Finishing off with the Kiwi has been more weak than the Aussie, and you can see this week, not a great week. Week early in the week, we have 3 days of a base here, so it's just a matter of when is this thing going to break. Right now, the velocity just isn't there on Kiwi, but for me, I'm waiting for this one to break down because I would like to be short Kiwi. And frankly, I'd rather be short Kiwi than Aussie. If we take a look at everything stacked up, we got CAD, Swiss franc, and dollar as our strong currencies. Cryptos are terrible. And on trend scores, we got Kiwi, Aussie, yen at -1s, pound at a 0. Actually, that pound was supposed to be at a -2. On our velocity score, right now, CAD is showing the most momentum of our nicely trending stocks. And I like pound and Aussie on the downside. So if you look at this board here, it's telling, okay, where should I look to trade? Early on in the week, it's dollar long, CAD long. And again, I would rank those as CAD first, dollar second. And I think you want to be short pound and short Aussie. So let's take a look at some of those currency crosses. I know I'm going to be looking at specifically pound CAD and CAD Aussie. Let's take a look at pound CAD. Again, this is my #1 trade for the week, and we've got some resistance right up here. So I would love to see a bounce up to this 156.15 area. Right now we're at 155.95, so another 20-30 pips. I'm going to be looking for a reversal candle in this area. I'm not just going to short it immediately. I want to see a reversal candle, but this is my favorite trade on the week. Pound CAD short when it gets up around this 156 to 156.20 area. Give us a nice doji shooting star. Give us some sort of reversal candle. And then we need the confirmation. And then we are absolutely looking to be short here on pound CAD. The other pair is Aussie CAD. Now, Aussie CAD has had a big move to the downside on Friday. I think we need to have some relief here. I'm much more excited about pound CAD than I am about Aussie CAD because I think Aussie CAD has some bounce left in it. I will check back in on this one after the RBA announcement. If the Australian dollar is weak, this is absolutely a pair I'm looking at. Ankit, what are you looking at this week?
Well, this week I'm definitely more looking forward to trading around the news events because I think that's where we need to get some catalyst. One of the things that we're noticing in these markets is that these trends are like lasting a lot longer. I mean, if you take a look at dollar or even CAD, I mean, these things have been strong. I mean, we had that big pullback in the CAD, but then overall, this is very one-sided moves that we're getting. So whenever I get this, if there's some sort of shakeup that needs to happen, that will happen around those news events. And if you take a look at the next couple of weeks, there's tons and tons of data that we need to kind of go through and see how the currencies react to it. And starting off, the RBA, I think Aussie is a great currency to kind of take a look at, especially if it's broken down. I'm kind of surprised it's broken down ahead of the RBA, but this is where, we could get a temporary bounce on a Monday to really short into. The question is that the currency that now is trending lower? Aussie had actually held in really nicely and, boom, right there, we got that big break. And that has been, every time we get this break that, that has been there for the longest time, this is where it's a big deal. And it's going to try to retrace back a little bit. And as long as it stays below that breaking point, I think it's a good short. Any sort of rallies that you short into. I think that's why I think Monday is tricky or the Tuesday for the RBA, because that's when we expect RBA to hike rates and initial price action could be onto the upside. But I personally think that price action can easily be shorted if the Aussie is now getting into the weaker camp. I mean, if we take a look at seasonality patterns, I've noticed that the Aussie has generally more weaker in the summer months. We are also seeing negative factors like sliding copper prices and, we have the metal prices pretty down. I think that's contributing to it. So I think we have a lot of negative headwinds for Aussie. And Rob, if you want to pull up Aussie Kiwi, and this is a proxy I always take a look at, these two currencies that we could diverge and see if there's any sort of changing that's taking place. And I mean, take a look at that price action. ahead of the RBA, we're getting some price action that is not taking us to new highs, but actually making lower highs. I mean, early this week, we got a nice little bounce to that 111 area, and then we quickly rejected that. So, I mean, great example is Kiwi today. It's not as weak as the Aussie, and Kiwi actually is a 0 on a velocity where Aussie's at a -2. There's a change that's supposed to take place, and again, I'm looking at that divergence because I know, Rob, you like Kiwi more to the downside, but I think if we need to see this, the seat that will swap with each other, I think that's something we need to pay attention to Aussie Kiwi. And if it does break that 110 level and start to move lower, which is where right now there's not a whole lot of optimism in this pair, is more sideways price action. But if it does change that, I'm looking for the regime change in the Aussie Kiwi. And then Aussie start to underperform, and we can actually use Kiwi more onto the upside when we look for those bounces here. I think there's more downside risk in the Aussie here, and we can also take a look at, Rob, if you want to pull up Aussie dollar. I was watching that support that has been in place for the longest time, and I mean, even like throughout the week, I talk about it. The price action around that bottom was tricky because every time we get to the point, it bounces, and we can see that we actually bounced before plunging lower today. So again, big test right now is that it stays below that level. We could see it initially pop back up. If this goes back above that line that we have drawn over there, we could see a bit of a relief rally. I mean, just similar to what we saw back in early June when we tested that level and we actually rallied off of it. If this doesn't fail to rally, I think it's a clear signal that it wants to go lower. And Rob, if you want to zoom out here, remember the Aussie was the first currency that actually was in 2020 rally that we saw. I mean, Aussie was the best currency out there. So there's still quite a bit of frothiness in these currencies. I mean, and this is where it's so tricky as you take a look at some of these currencies right now. The dollar, if you look at DXY, I mean, dollar is at the highest level since COVID. But clearly, if you take a look at a lot of these dollar crosses, I mean, they're not anywhere closer to those levels that we were at when the COVID hit. So that's why, I mean, using the currency baskets are a great way to take a look at it because, if you look at DXY, heavily weighted with the euro dollar. So it's not really giving you a great picture of what the dollar is doing, even though it's at 2020 highs, but everything else is not really at those lows yet. So I think if the dollar wants to stay stronger, then there is areas where a frothiness needs to come out. And I think Aussie dollar would be the one that I'll be looking at for a further break. But those are the ones that I'm looking at. Like I said, it could be a tricky week because of those news events. So we have to kind of go with the more of a neutral outlook and pick the direction once we get a bit of a clarity. But my initial thought process is that we could see a bit of a rally initially off that rate hike, and then we could see that fade away. That's a great sign for something that's weak, is that any positive movements will quickly fade away. So that's my outlook, Rob. But I'm very excited for next week. I think these new events will give us good catalysts, which we were missing this week. But next week, we can actually find more activity around those times when there's scheduled event risk.
Absolutely, Ankit. And I also agree that the Aussie is a great short if we get a pop off that RBA. That's going to be one of the things I'm looking for late Monday night. Let's wrap this all up. We think that markets have found a short-term bottom. Now, don't get excited about that. Remember, it doesn't mean it's a bounce. It's not bullish. We just think that we've probably put in a credible enough bottom to just have this U-shaped. It might last through the whole summer. We think it's going to be sideways but volatile. And so what that means is 2 days up, 2 days down, 1 up day, 1 down day, lots of that choppiness. Yen is going to be difficult to trade in that environment. So that's why I don't really love yen yet. Once we get a little bit more bullish action, I think yen short is the number one trade. But until then, I think you need to be wary of yen. Go play in the other currencies. Aussie looks weak, pound looks weak, CAD is strong, dollar strong. Go play in those. And then once we get a clearer signal on where equities are going, then it's going to be time to go back to the yen. We are going to be meeting live on Friday and also live on Wednesday as usual for our midweek update. So Friday, come join us in the morning for a live trading session around the U.S. payrolls report. On Thursday, we will be sending out a video to all of our traders. with a preview of what we're looking at and some of the potential trades we're looking at as well. Everyone have a great weekend. Equity markets are closed on Monday in the US for the 4th of July holiday. So expect there to be light volume, light volatility on Monday. Probably when the RBA announcement comes out, that's when the real trading is going to start this next week. Everyone have a great week. Stay safe and take care. Goodbye, everybody.